Hello, everybody. This is Kimchi Crypto. I am going to talk about the timing. I would sell everything, especially when this happens. Let's dive in. Bitcoin traders eye seasonal Santa rally as Fed moves spur volatility hops. Strategic accumulation and potential liquidity easing measures could breed a Santa rally. Well, it's already November 11th, so we might have a December Santa Rally expectations as time goes by, and U.S. stimulus matches taken by the U.S. President Donald Trump, including 2,000 tariff dividends to every single American citizen. This could positively impact risk assets such as Bitcoin and altcoins as well. Market volatility is expected to remain high, driven by structural shifts in liquidity and institutional flows rather than retail speculation. It's about expectation about easing liquidity, the Fed cuts rates, and TGA accounts, it goes down in the US, Treasury Department, stimulus checks, etc., which sounds great. In my personal opinion, Q4 would be great. And this might be another great indicators that let me just explain it later when exit exactly. The Senate Agricultural releases long-awaited version of crypto market structure legislation. The bill brings Congress a step closer to firmly defining how the CFTC and SEC can oversee crypto. The Senate Agriculture Committee published its draft Crypto Market Structure Bill, a necessary step as the Senate inches toward its own version of House's Clarity Act. That committee's bill will need to be combined with its Senate Banking Committee counterpart before the Senate can advance the legislation, a process which may yet take months. Good news is Crypto Market Structure Bill, aka Clarity Act, draft came out. Finally, in the end. Bad news about this, it might take another several months to be completed 100%. In my personal opinion, Clarity Act may pass when market reaches blow off top somewhere in 2026. When especially exit. Another great indicator, let me show you. It's all about Paul Tudor Jones. He was on CNBC interview a month ago with the he mentioned exactly this. It feels like we are in 1999. It feels like exactly we are in October 1999. Let's take a look at Nasdaq index. He mentioned that we are here, October 1999, in the middle of dot-com bubble, and 5 months later, we had a blow off top in March 2000. What happened afterwards? After a 2 year long, two and a half year long, huge bear market started and it bottomed in October 2002, which was brutal, right? This implies that AI bubble is somewhat true, according to Paul Tudor Jones. Currently, Paul Tudor Jones, however, still has tech stocks, crypto assets, and gold. He still awaits last blow off top in both crypto and tech, US stock market. Why? Why is very a different key when he will sell? Well, accuracy. How accurate was his prediction, especially about short saying timing? His timing was extraordinarily precise within days of the actual crash. You remember the Black Monday on October 19th, 1987. It was the biggest ever US stock crash on a single day basis. His fund reportedly made about 62% return for the year 1987, largely from this single trade. Documentary Trader was also made after this event. The outcome was Tudor Jones earned tens of millions of dollars personally from the short. His accurate anticipation of the crash cemented his reputation as one of the greatest macro traders of all time until now. His short timing was very accurate within days, and since then, he has become a legendary investor. What about this guy then? Another famous and successful, somewhat controversial investor right now, named Michael Berry. He was in the film named Big Short a few years ago. How accurate was his short position then? Let's compare the two. Paul Tudor Jones' US stock market, he shorted in August, September, October, and the bubble burst on October 19th, 1987, the Black Monday. Exceptionally, it was precise. Within days, and a major position, he just went all in just a day before actually it went under. Michael Burry, whereas he shorted US housing market, as you know, he shorted in mid to late 2005, but the bubble burst in 2007, even 2008. His timing was very early, around 2 years before the real crash. Currently speaking, Paul Tudor Jones still holds crypto assets, tech stocks, as well as his gold positions for hedge. As of late September, Michael Berry, his position was revealed at the SEC that he has already shorted on Palantir and Nvidia, which was the AI technology major stocks. I'd bet on Paul Tudor Jones rather than Michael Berry when it comes to making a short timing. It's about timing, right? Paul Tudor Jones still await blow of top versus Michael Berry looks somewhat impatient to myself. Both of them agree AI stocks are somewhat in the bubble area. Given crypto is now a macro asset, given there comes more liquidity to come in 2026, I would sell every crypto when Paul Tudor Jones shorts AI stocks. He sells his AI stocks sometime next year. I don't know exactly, but it seems like several months away from now. Why? Paul Tudor Jones is a lot more balanced and sophisticated investor. His net worth is around $8 billion. Legendary hedge fund managers around the world. In my personal opinion, Paul Tudor Jones, his timing has been more accurate than other competitors. And he has also hedging positions with Plan A, with gold, with something else as well. He is not just opium guy. When he sells, I would check out major indicators such as ISM, PMI, or Coinbase app ranking, Bitcoin dominance, RSI, trading volume, dollar index, etc. Whether Ripple, went public, etc. But at the same time, if most indicators say yes, it's time to sell, and Paul Tudor Jones shorts his position sometime next year, then I would exit the market. What are your major indicators for exiting the market? What do you think about this thesis? Thank you for listening.